The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the May 29th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday. It's time to get terrific Thursday underway, and our first course of action, well, it's to make sure that we have our daily outcomes well defined. My outcome for you, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when we master the tools of our mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD and swing points, Gartley patterns, and various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each and every day. Now, each of these signals and patterns, they're in what I consider to be a category of tactical tools, and knowing how to use these tools is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy, well, that's a recipe for failure. And failure, folks, it is not an option in our playbook. This next statement is a key to our strategy, and it's super important not to confuse the words failure and losing money as the same thing. You see, in trading and investing, our spoilage is money, much like the leftovers from a meal that undoubtedly, gets thrown away or into the trash down a garbage disposal. You know you've done it before in the past. Maybe even did it last night. Maybe even did it this morning for breakfast. Yet most of us don't correlate that kind of waste to throwing away money. But when we stop to think about it, it's really one and the same. And in trading, as long as we use stops, as long as we have a strategy, and that strategy needs to include a bracketed order, that means we've got both exit points identified, well, then the loss of money is nothing more than spoilage, and it becomes part of our trading strategy. And all this becomes much easier when we understand our system expectancy, and that's really our performance tool. So today and every day, let's do what we can to think like a strategist, because strategists, they slay that tactician all day long. So let's get ourselves into a peak physical state by sitting up. Get those shoulders back as far as you can, taking a nice deep breath, and let's get ourselves in that wonderful, wonderful peak physical state. It's always easier to do something from strength than it is from weakness. Now let's take a look at one of our tools that works on our mind. And that's the tool I call the human spirit. You and I, we've all heard about people who've exploded beyond the limitations of their conditions. Maybe you happen to be one of those. Because these are folks that become examples of the unlimited power of the human spirit. Well, you and I, we can make our lives one of these legendary inspirations as well. All we need is the courage and the awareness that you and I, we can control whatever happens to us in our lives. Pretty amazing, huh? Sure, we can't control the events in our lives, what I call life circumstances, but you and I, we can control our response to those events, and we can control the actions that we take. You see, circumstances are like the wind, and like the wind, it happens to all of us. The key is that we control when and where to plant our sail. So always remember, control what you can control. You can control where you put your stops, I guarantee you. You can control where you put your exits when it comes to trading. What I want you to do is I want you to plant your sail and then let life circumstances, let that wind be at your back. And if you lose some money on a trade, it's just spoilage, folks. Nothing more than that. So if there's anything in your life that you're not happy with, then make a decision right here, right now, about how it is that you're going to change it. There is no time like the present, because that, folks, that's the gift of the human spirit. And you, I know you out there, I'm speaking directly to you. You've got the best human spirit on this planet. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here. Dow futures up 27 points right now. They're trading out at 16,656. S&P futures up 3 points, trade at 19,1250. NASDAQ futures up 9 points, trading out at 37.25. King dollar back 6 pennies right now. It's trading out at $80.55 out here. In the hard currency market, you've got Goldilocks back $5. She's trading at $12.53.90, or he's trading at $12.53.90. Silver trading down at 17. At 17, trade down. Maybe this is going to be trading down to 17. Maybe that wasn't a Freudian slip out there. It's trading down 17 cents, which is what I meant to say. But maybe it is going to trade down to $17. Right now, it's trading out at $18.89. Light sweet crude $103 even, Steven, as we speak. A quick peek across the globe out here. Over in Germany, we've got the DAX up 1 point. No big shakes out there. FTSE, we're going to take a look at the FTSE, because the FTSE right now, I believe it was today or yesterday, it is breaking above its larger term consolidation. It's up 19 points right now, about 0.25%. A little bit of a mixed bag over in Asia last night. The Nikkei up 10 points, no big deal. That's a flat market. Hang Seng off 69 points. That's 0.3% to the downside. And the Shanghai off 10 points. That was about 0.5% to the downside. Our call-in number, 877-927-6648. Feel free to give me a call, folks. Happy to take a look at your stock, whatever it is that I can do to assist you when it comes to your trading and investing. Let's. Where do we want to kick off our day here? Let's go take a look at the daily charts. Let's go take a look at yesterday, see what we've got going on, take a look at any candles that might have shown up on the charts. Let's start by doing that. Let's take a look at the ES Mini here. Let's look at the ES Mini. That's the S&P futures. Get a feel. Now, yesterday, just what's referred to as, let me get my cursor out here, little high wave candle. Now, high wave candle looks like a doji, smells like a doji, doesn't taste like a doji, though. Not that I know what a doji tastes like. It's just a candle session that says, hey, I may have lost my way. You know, it's kind of like, I don't know if you've ever had this experience. You know where you parked your car. You certainly know where you walked, you parked your car. And you walk out of that store, grocery store, whatever kind of store it might be that you're at, and you look and you're like, where the heck? Now, you might not have used that word heck. I don't use that word heck too often, except I do on the radio show. And it's like, where the heck did my car go? It's like my car didn't lose its way. I lost my way. Well, in the case of the ES Mini S&P futures, it lost its way yesterday, but looks to be finding its way. Looks like it's headed out to its car in the parking lot, and that is looks like it parked in the back of the parking lot. It wants to go higher prices out here. If we take a look at where the ES Mini wants to trade to, let's go put up our Ensign software package out here. Why do we want to put that up? Because it clearly just shows more easily. It's not even, that's terrible grammar out here. It's more easy for me to be able to show you what we're looking at, that consolidation pattern. So we take a look at where is it that the ES Mini is going to. The price point, the minimum price point of the projection out here of the break of the consolidation pattern takes it up to $1,957. You see, since the time frame here, about October of 2013, we've seen a nice little sine wave that, kind of like the EKG of, if you're to watch an EKG, of your heart. And that's really all the market is. When we take a look at a chart out here, okay, the chart is nothing more than the electrocardiogram of what's going on between all of the traders. That's really what it is. In this case here, this one had a nice little sine wave going from the lows down here of about 1742 up to about a high of about 1835. Then it came all the way back down to the lows, went back up to the high. At that stage, it decided it wanted to run a little bit of a sprint. It made a higher high back here on March 7th. It came back and really tested that area. Remember, we're using this really as a guideline, not to be exact, not to the penny out here. Sometimes things work to the penny. But if they do, just consider it to be more of a how the heck did that happen situation, and instead use this as guidelines. Well, the guideline is, you break out of consolidation, you break out of a trend. What you like to see price actually do, you may not like to see it because of where you took your position, long or short, but I can tell you from a technical standpoint, what you like to see is price come back, test that area, and then reject it by either moving higher or lower, depending on which side of the trade that you're on. Well, in this case here, price moved back inside the consolidation. What it did back in the time frame here of April the 10th, April 11th, or April 14th, I should say, out here, was also traveling, and it found support at the nice little rising price channel. This rising price channel takes us back into November 2012, so it's a pretty good price channel out there that price has been traveling within. You can see, if we take a look at a number of other tools out here, let's take a look. Let's take a look at the ESPN. Let's look at an A to B equals CD. So that says 1957 out there. Let's go ahead and put up by E-Signal system. Let's take a look at the TAS market profile. We'll take a look at the ESPN. We'll take a look at the daily chart out here. Now, on the daily chart, I've got a small A to B equals CD. That's not the one I wanted to show you. What I wanted to show you out here, give me a moment to just delete the one that's out there. Let's take a look at the larger A to B equals CD out here. So the A point that we're going to use, let me get that tool started. We're going to use the low. Let's see, the low on the trading session of February 3rd. Let me see. That's down at 1725. Yeah, that's 17. We're going to use the. We're going to use the low right here from February 5th. So that becomes our A point. That's our A point. The B point is going to be the high out here on April the 4th. Our C point is going to be the retracement right down into the bottom of in essence, what's a channel line. Now, it's a little different channel line that shows up on the screen here in that blue area. But our C point is going to be the low that came in on the trading session of April 14th out at 1803.25. Now, the 1-to-1, A to B equals CD to the upside, takes us to 1970. So you can see we've got a multiple of different patterns out here that are suggesting that price wants to go up to that level. You've got the B point. Let's take a look at the B point. The volume, when we take a look at the contract out here, let me see if this tool, this tool actually shows me the volume out here. Because I've had to stitch together in order to use and give you the market profile, and that's what I'm really looking at right now out here. What the guys at TAS Signal, what they've done is they've had to find the tools to be able to stitch together all of these contracts. Well, the volume on that trading session of April 4th, that was 1.2 million. Yesterday, up and over it with only 761,000, a little bit shy, 922,000 contracts yesterday. Nonetheless, higher price is where the S&P wants to head to. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, TAS Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAS Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAS Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Thanks so much for joining us. So let's take a look at what's going on inside the markets out here. So we were taking a look at the S&P futures, and one last thing to cover on the daily chart out here. So we've got a break of a consolidation. When you break that consolidation, your measured move is equal to or greater than the consolidation. That's typically what will occur out there. Secondly, we've got an A to B equals CD. Now, that B point was not passed with volume. I don't know if I can trust the volume on that. I think that I can, but because these contracts had to be stitched together, I'll go over and take a look at something else. And just take a look at it. Nonetheless, I believe we've got an A to B equals CD to the upside that is being formed out here that would take price into the 1970 area. The unfair high of the TAS signal box for the S&P futures on a daily chart. This is where it's good to be long. It says okay to be long, not okay to be short out there, is at 1898.50. You get back inside 1898.50, then that changes the outlook to maybe more neutral to maybe being bearish if you wanted to, take, if you were a trader that could use some relatively tight stops, if you were disciplined enough to say, okay, I'm going to go ahead and close out the trade if price closes above X out there, and that's how you'd really have to do it. So on the daily charts out here, we're seeing really a number of different signals that suggest that the ES Mini wants to travel to much higher price. It's going to be a nice summertime rally out there. Now, what the market really needs in order for that to occur out here. I'm going to do a couple things this morning. Let me just get back to that momentarily. And that is going to be this chart right here. Here's really the key chart of the day. Well, it could be today, it could be tomorrow. I'd like to say it's really today because it's got that opportunity. That is our friend, yours and mine, the Euro-Japanese yen. Now, yesterday I spent quite a bit of time on that. If you didn't catch yesterday's show, go check out the archive on Channel 9. All the archive, you get that show. You can download it through iTunes. They've got it from an audio standpoint while you're working out or what have you. But in any event, what this has formed on its daily basis, you really got a couple different things coming together. On the daily charts out here, it's got a nice 0.786 Gartley buy pattern. And what it needs to do today, the Euro-Japanese yen that is, let me see here. Inter-session, it may have, I'll have to see. The inter-session high so far has been 138.50. If it gets up to that level, 138.50, it could, I'll have to really take a close look at it. It could form a hammer candle, which is really what you'd love to be able to see as you're forming a bottom out there, as you are potentially forming a bottom. And but at this stage here, we don't have a bullish candle configuration whatsoever. If anything, you got a high wave candle to the downside. We took a look at the high wave candle on the daily chart out there for the ES Mini. But we have a lot of time left in the trading session. Now, the Euro-Japanese yen, the reason why it really bodes well for a large summertime rally out here. That doesn't mean we're not going to see some sell-offs and some retracements. In my opinion, those would be retracements to buy. It all depends on what happens with this currency pair, though. But if we do find a nice bottom here, a nice bottoming pattern, a nice buy pattern, the first outcome of this pattern, just to give you an idea, and again, it's a directional indication out here. The first target area is the 140. That's the first outcome of any Gartley buy or sell, is the dead cat bounce at 0.382 level. But more likely what you would see is a move up to the 0.618 retracement area. That would take it about 140, 155. That's the liquidity gauge. If you're wondering where it is, this is the liquidity gauge out here, and it's why we want to be paying attention to it. That's on the euro, Japanese yen. So you got prices moving higher. You've got prices moving above market profile levels that are bullish. You've got the currency pair that has been pushed down. We talked about that divergence yesterday, so we have to be paying attention to it. But nonetheless, right now, this is attempting to go ahead and complete and form a 0.786 Gartley buy pattern. So we want to be paying attention to that. And then one last thing here on the currency pair. Of course, for me, it's really never one last thing. But the next thing we want to just take a look at on the currency pair is this chart. And this is a beauty as well, because as price is coming down, forming that Gartley buy pattern. This is the weekly chart for the euro Japanese yen. The weekly chart, after breaking above resistance, that's the real thick red horizontal line going across my screen out here. All price has done is come back right now, and it's just testing that area. So long as it holds here, that bodes well for the bullish side. If a 0.786 Gartley pattern does not form, and we see price get below that red line, that'll be a red line that the bulls do not want to see price move below, because then all holy heck could break loose out there. I don't expect that's what we're going to see, but this is a red line that becomes pretty easy for us to follow out here. We get back, we're going to take a look at, the market's going to open. I was having some trouble. I'm switching systems. I had some other issues this morning. Not like I have a lot of issues, but what I want to do for my subscribers, I'll do it for you. Each morning, they get to see the Rhodes Momentum Indicator signals, either the trend signals. I cover all the indexes, the index ETFs, all the sectors, the futures contracts, commodities. So I'm going to show them because I wasn't able to get that into the newsletter this morning. We'll do that after the market opens. I've got that up and running as we speak right now. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow up 32 points. Trade out at 16,665. S&P up 5, trading at 1914. Composite up 15 points, leading the charge to the upside. She's trading out at 42.40. Russell 2,000, not far behind. Trade up $3.50. Trading out at 11.40. Apple up $6 this morning. Trading out at the 6.30 area. Lead the charge here. Stock-wise, Intercept Pharmaceuticals up $12. That's up 5%. Hillshire Brands being courted by many out there. She is up $7. That's up 16%. Palo Alto Networks, PANW. Believe, were they out with numbers? Yeah, they were out with numbers here this morning. They had a third quarter loss of $139 million versus 7.3 from the year earlier. But, man, they are up. The revenue's $150 million versus, wow, how about that? These guys, they increased their revenues by 50% out there. They went from $101 million last year to $150 million for the third quarter. They are trading up about 11% here, trading up $7. You've got AmSurg Corp, AMSG is the ticker symbol, not to be mistaken with MSG out there. You know, salt is what it's really called in the Chinese factories. And anyways, $3. I'm sorry, about $3. Yeah, it's up about $3, about 3.5% out there. Amazon up about $2.60. Tesla up $1.92. Tyson Foods, who's the latest court of Hillshire Brands out there. That's trading up 5%. That's up a couple of bucks. Tilly's, TLYS is the ticker symbol. That's the lead. The charge to the downside off $2.45. Whew. It's off 23% here this morning. So that is nasty looking. Michael Kors down $1.75. Fabrinet, FN is the ticker symbol. That's off $1.30. That's down about 6%. Home Away, AWAY, is the ticker symbol, off 4% this morning, down $1.28. Booz Allen Hamilton, off 5%, down $1 out there. Again, our call number is 877-927-6648. Now, I'm in the process of changing over computers and ran into a number of little obstacles here this morning. Of course, I've been up since 5. You would have thought that by 9 o'clock I could have got everything solved, but no, that wasn't the case out here. Now, each day inside my newsletter chart, so I mentioned inside my newsletter to my subscribers, I try to have this done during the first segment. I didn't get it completed by the first segment, but we're in the third segment. Not too bad. Now, each day in my newsletter service, what my clients get, and the newsletter gets out by 8 o'clock, and usually I'm doing this by, well, in this case here, this in essence is as of the evening before, because these are, what I'm showing you on my screen here, is the upper portion is showing you each of the primary indexes. So I got the NASDAQ, the Dow, the transports, the Dow Jones Industrials, the NDX, the New York Stock Exchange, the Russell, the SOX, the XAU, the S&P 500. So it's got all your primary indexes that you want. Then below it is the index ETFs. Then below that is the actual sectors within inside the S&P 500. Now, okay, so I've got that displayed. What I then also have here is I've got the monthly, I've got the weekly, and I've got the daily trends. And I have when each of those changed. Remember, the trend is your friend out there. The trend is your friend. And what I want to do is I want to make it easy for all of my clients and subscribers to be able to, in 1 second, be able to go to a page and see what is the trend out there. Are we in bullish? Are we in bearish territory out here? And that way they can use it for their different trading styles. Now, what I also include in the newsletter in the mornings here, I want to pop that up, is I also include what's going on inside the futures contract. Let me just close this one down here. Here's what's going on inside the futures contracts. And this is taking a look at monthly, weekly, daily, as well as what's going on inside each of the commodity or the primary commodity complexes, light sweet crude, gold, natural gas, silver out here. Then I've got the different currency futures as far as what somebody might trade, because, you want to be able to have that wind at your back. You want to be able to plant that sail out there. Okay, you want to be able to do that, and if you're going to go against the trend, you're either trying to buy a bottom or you're trying to sell a top out there. And wouldn't it be nice to know what's going on inside the trend? What I also provide, and I'll put that up there, so that covers the longer term time frames. What I also provide to them is I provide this, which is the shorter term time frame. What's going on a 120-minute, a 60, and a 30-minute chart? You see, when trends are going to change, at least from a trading standpoint, it's going to first happen on the 30-minute chart, then a 60, then 120, then the daily, weekly, and so forth, right? So that's how it works. If you take a look at the index futures out here, mean the ES, the NQ, the Russell 2000, the Dow, you can see on the 120-minute chart out here, we're in the bullish zone with regard to everything except for the Dow, which is a little bit weak out here on its 120-minute time frame. It's kind of bearish to neutral out there. In any event, that's what's going on, so I wanted to be able to present all this so that my clients could see what's going on. This is what they're used to getting each and every day, and you can get it too. Just go over to the homepage at TFNN.com, click on my name, and you'll see all the details so that you can sign up for Mastering Probability. Let's go to Don in Odessa. Don, thanks for calling. Thanks for holding. How you doing this morning?
Good morning, Steve. Thanks for taking my call.
My pleasure. You are in UNG, natural gas out there.
I got a couple.
Yeah.
I was just going to say I got a couple of calls for June 26th.
June. So it's a June contract. Is that the one that you're trading right now, or is it July?
It's June.
You're trading June.
I got 23 days to go, and I'm hoping it'll go a lot higher than 26.
Okay. Let's put this. Let's put up the June contract. So NG, and I've got M4. Now I got to do this little =1 sign out here to get it to come up. There we go. Okay. Oh, that didn't look right. Let me refresh my screen here.
I've got June UNG, Steve.
June UNG. Okay. All right. So let me put up the UNG contract as well. Okay. All right. So tell me exactly what you're doing, what you're looking at, and how I can assist you.
No, this was a real dumb trade on my part. I was listening to Andy last week, and I got all excited and jumped in some 26 calls and I watched it go down, and now it's back up, and I'm positive on the thing, and I'm afraid I'm going to lose more, so I'm thinking about selling the darn thing right now.
Well, let's take a look at yesterday's information, that the UNG gave to us, and we'll go back and we'll try to see what's going on inside the contract. So reasons to potentially sell. If we just take a look at normal retracements here, well, let's first take a look at swing points. The swing point that it passed yesterday was May 20th. There was 4.4 million shares out there. Yesterday, you're up above with 8 million shares. Hey, that's not too bad.
No.
So you've at least passed a swing point with volume. Now you're coming into that downdraft. That's, I guess, your scary situation. That's the May 8th area, which has 13. Yeah. So you got 13 million shares to the downside. If this were to, you're in the money now. Mm-hmm. Your instinct tells you what? Take them both off the table.
We're about at the 1.27 expansion on this thing. I'm not sure if we might get all the way up to that 26 or not, but more than likely we're getting pretty close to a retracement here, and that's what my thinking is, honestly.
So if we were just looking, so your conundrum, is in paying attention to what's going on the left side of the chart in that downdraft. Is that really your biggest issue, would you say?
It is, and I'm really not that experienced with trading options, so I know that there's a problem with decay on these things.
Yes.
And I suspect that it's probably going to get quite a bit higher between now and the end of the contract, which is 23 days from now. But with decay on a down, if it goes back down, I'm going to have some decay problems, and I'm not sure if it'd be good to hold the thing until it does go back up or not.
Yeah, let's see here. Let me put up another chart out here. Let me just real quickly get over to, I want to take a look at the weekly daily out here. So give me a moment. Let's pull that up. We can take a look at what's going on in both of those. Now, it's going to put the continuous contract up out here, but that's okay. That'll give us a decent feel as to what we're looking at. So that's populating as well. Okay, cool. So one of the things that it also did yesterday on the continuous contract out here is it got above the 50-day exponential moving average. Mm-hmm. So I showed that on this is the natural gas contract. I showed that at $4.57 out there. So I would say, that's another positive for you that it's up above that level. And the weekly looks pretty good, too, from a candle standpoint by getting above the 456 level. So, and on the weekly basis, what it was doing last week as it was moving down lower, what it was also on the weekly chart, on the week of April 6th out there, it's got a hammer candle, which is pretty nice. So price just came back down into that area. So by taking a look at momentum out here, weekly is a little bit cautionary, but, tested a hammer. It rejected it. On the daily chart, it looks like you're above the 50-day exponential moving average. So that is telling me, okay, that looks pretty good. Let's take a look at the 120-minute time frame, see if there's anything for you to be concerned about on its chart. So I'm going to, again, put up the continuous contract out here. So we've got all the data. Give me a moment to throw that up on the screen out here. Let's see what this time frame shows us. Of course, I need to actually put it up on the chart. That would be helpful if I did that. Here's the 120-minute chart. Give me a moment here. Natural gas, continuous. Okay. Boy, the 120-minute chart shows that you've really got the buyers in control out here. So this looks pretty good. I don't see a reason on this chart to suggest that you would go ahead and sell this at this stage. So this looks pretty good to me. I'm going to go back now over to, you don't mind me flipping around to different charting tools, right?
No, I don't. I'm pretty certain it's probably going to go higher before the end of my little calls here. It's just that I'm
you get
concerned.
Two contracts?
I do, yeah. I'm concerned about the down retracement on this thing and then losing because of decay. That's my big question.
Yeah. Look, here's the thing. This is a business about making money. And so when you've got uncertainty or what have you, first, I would never get, making money is what it's really all about. And at this stage here, you're making money. So, the time when you sell and you're going to complain about making money, that's really a bad,
you're going to really knock me down for this. I'm already 20% up. So
No, I'm not.
That's pretty good.
No, not at all. No, not at all. In looking for signals, looking for anything even on a shorter term time frame here, if I just even put up that 120-minute chart, and I'll knock that down to a no, I'm not going to knock it down. You're a great trader out there, and you're making good decisions. And I'm just trying to find any reasons for you, any signals out here that would say, hey, maybe you ought to sell, just to help give you that confirmation. And I haven't found those. But the signal that is the best signal is the one that's in your gut.
Well, I'll tell you what, I appreciate it. I'm going to go ahead and probably sell them, and then I'm going to watch to see how much decay I have here. Like I said, I don't have a lot of experience, so
yeah.
I'm in.
When you have conviction behind a trade like you do, and obviously right now with the volatility index being where it is, it's a great time to be taking a look at using options for trading vehicles. But there's no reason for you to not flip the trade and go into the UNG equity itself.
Or you think, yeah, that's a good idea, actually.
You know, I mean,
That's
it's see what I'm hearing in your voice is conviction behind the move out here.
Yeah.
That being the case, you know, we're not. Yeah, you're up against an expansion of a set of swing points and a retracement of another set of swing points and a bit of a downdraft out there, but it's something else to consider.
Okay, well, I appreciate that. I didn't even think about doing that, honestly. So,
you know, one other thing, as long as I got you on the phone here, let me just see if I happen to have the Taz signal box. I don't know if I've got natural gas up here. No, I don't. I'll see if I can figure that. I won't be able to figure that out during the show out here, but I probably ought to put it out up on my system just as one other thing for us to take a look at. So I don't have that. You've gotten all the information that I could give to you on the trade. So, you know, good luck to you. Great trading, by the way, and, you know, thanks for calling.
Thank you, Steve.
You bet.
Bye-bye.
Have a great day. That was Don in Odessa. Now let's take a look at, you know, as long as we're in this commodity marketplace out here, let's take a look at commodity currencies, talking about everything. Let's take a look at Goldilocks. So we had a call the other day. Let me see if I can put up a little cleaner chart. I don't want to have to get rid of that one. Let me see if I've got the daily chart for gold. Yeah, here's a daily chart that I can use for gold. Now this is the continuous contract here for gold, and somebody had called me about. And gold right now is trading out at $12.55, by the way. So gold had confirmed an A to B equals CD to the downside. I guess what I wanted to show doesn't show up here on this chart. So I'm just going to have to go to Plan B. Plan B is, let's just take a look at that A to B equals CD that actually confirmed out here. And it says that we ought to see gold move down to the 1191 area. That'd be your one. That'd be your 1-to-1 A to B equals CD. I have a hard time buying into the fact that if gold really starts rolling to the downside, that's really where price would stop. It looks more now. Here's the interesting thing when we take a look at gold here, and this on the continuous contract. What we can see is it has moved into that extreme-ish type area of being oversold. Last time gold was down into this area was back in December 2013. Out here. Made a nice lower low, by the way, on December 31st. It was done with, less relative weakness. That's what really cemented the nice bottom out there on New Year's Eve. It doesn't look like we're going to have that same pattern. Well, I know we're not going to have that same pattern that will at least occur until maybe next week. Maybe a lower low with less relative weakness. Maybe that sets up the real nice buying opportunity. But it's not there right now. We got the Dow is, where is it? S&P is up 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, the Dow is up about 20 points out there. Dow has really been the laggard to a certain extent. We'll go take a look at that. Maybe I'll put up the futures contract because that too is breaking out of a consolidation. So let's see, three things or a couple things I've talked about that I've got 4 minutes to do with you. One, let's take a look at this is the 30-year Treasury contract that we're taking a look at here, and today has the potential to form a 3-drive to a top pattern. Now, what these are patterns here. It would complete right around the 139.08 level out here. These are not patterns that you go ahead and force or what have you. The first drive that I'm looking at took place on May 2nd. Price was at 136.16. The next drive took place out here on May 15th. Now, you like to see these make a Fibonacci expansion out here. It didn't make that, was the expansion was like a 2.2. So it doesn't have to make a Fibonacci expansion. But the third drive out here, which from a time standpoint, because it's a 9 trading session cycle out here, would actually complete today or tomorrow out here. And so by tomorrow, we'll say tomorrow would be today, tomorrow is the time frame. 139.08, the 1.6 expansion of the last set of swing points would take you up to 139.08. Now, just because it makes a 3 drive, does that mean that it's bearish? No. All patterns need to be able to confirm for you. And so unless you are trying to sell tops or buy bottoms out here, you'd like to wait for the actual traders to tell you what it is that they want to do. So that's what's going on inside the 30-year Treasury. I did mention and when we opened the show about taking a look at the FTSE out here. I know I can get it out of my mouth. It's just I'm multitasking. I'm trying to find where the heck. There we go. It's right here. It's 2 tabs over. Here's the FTSE. So the FTSE's been trading at a 430-point consolidation. And it's today's session. It's trying to break through this level. And if it can break through this level here, which means a close above 68, 66 or so. Now, look, it closed above that, gave us a key reversal session back here on May 15th. So the real confirmation that the FTSE is going to move to higher ground out here is going to be a close above the May 15th high, which is 68.94.88. So 68.95 out there. It's not there yet, but it is threatening to be able to bust through that consolidation. I wish I had volumes. Look, it's neither overbought nor oversold. It's got room to run to the upside out here, and a close above 68.94 anytime would be the confirmation of about a 400-point move left inside of the FTSE out here. So we're seeing all the markets really kind of line up here. You know, if we take a look at the Hang Seng, this is a monthly chart out here. Hang Seng has held its rising price channel, tested that earlier this month. It's held that area, so it's still in the rising price channel out there. So that's a bullish configuration. The DAX here. Now, the DAX has got 3 trading sessions. It gapped up because of the holiday. I believe it had a holiday. But between May 23rd and May 27th, this thing gapped up. It's been trading just slightly higher to sideways out there. I don't know if on this chart here, if the island reversals, if they have a lot of meaning. I think that they do inside the DAX. So we'll want to be paying attention to it as well. But the DAX looks like it, too, is breaking out of a consolidation. That consolidation, just similar to the FTSE, looks like it's from about 8,900 to about the top of about 9,700. So that's another 600 points or 8,900. That's about 800 points, right? 800 or 900 point consolidation. So New York Stock Exchange, it's in full bullish mode. It's up 22 points here. So that looks good. We got the ES mini, so we got everything pointing to markets that just simply want to take off and have a nice summer rally. So let's not be too worried about that 6-month unfavorable seasonal cycle that we're in here, sell in May, because it doesn't always mean sell in May. It may mean some other time during the 6 months. Well, folks, our hour's up. Thanks so much for joining me. Have a terrific Thursday. I look forward to seeing you real soon. Take care. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.